Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Lee Kian Soon, CEO of Astral Asset Management out of Singapore, this 7th of June. Now, Kian Soon, as always, great to have you on the show.
Good afternoon.
Now, Kian Soon, we've got, before we get your insights, we're going to take a look at how regional markets are performing. But first of all, we will start with crypto markets. Bitcoin is at 30,085. It's down 1.24%. Ethereum is at 1,853, down 2.98%. Now, looking across the regional markets, we will start where you're at, Kian Soon. The Straits Times Index is down 0.38%. Bursa Malaysia, where I'm at, is down 0.28%. Shanghai is down 0.38%. The ASX All Ordinaries is down a whopping 1.54%. The Nikkei is down 0.51%. The Hang Seng is down 0.11%. And rounding up the red numbers, we've got the Kospi, which is down 0.33%. Kian Soon, pretty dismal numbers today and yesterday as well. Tell us why.
Yeah, it looks like the market is not happy, and it's apparent that we are going to see another interest rates hikes in United States in July, and I think the market is digesting it. Previously, there's a lot of positive energy and news that the rate hikes might be stopping at rate hike number 10, but apparently this is not the case given the robust employment data as well as the very resistant inflation numbers we are seeing in United States.
Now, Kian Soon, then I want to take a broader look. There is a lot of uncertainty out here in the markets. It is geopolitical risk, there's credit tightening risks, there's a whole plethora of challenges that are worrying investors right now. Break down for us what are the key things that really concern investors today.
If you are looking at first half 2023, which has already passed, and you're looking at the outlook of 2023 in the remaining half, right? There are many drivers that are causing investors to be worried as well as having sleepless nights, I'll call. And the number one, namely, is in the United States, instead of a pause in interest rates hikes, we are likely to see one or two more coming up, and it's also unclear whether these, after the one or two more interest rate hikes, whether the inflation will be under control. So currently, this is an open issue, and people are worried that with rising interest rates, the implications are that the mortgage rates will follow, etc. In Europe, I think geographically it is in a state of war since the Russian-Ukraine conflict. We are seeing some of the key economies slowed down to a technical recession situation, namely Germany, United Kingdom, and it's very likely that they slip into a stagflation situation given that inflation remains very high and they are all in recessions in the coming months. In Asia, I think the glimpse of hope was for China to have a strong recovery, which was not the case. I think the recent economic data figures released showed that the recovery was not as strong as the market anticipated, and there are a lot of concerns about their slowing manufacturing and productions, as well as the consumers not unwilling to spend money. So these are all the key concerns we see globally at this point of juncture.
Okay, then given those scenarios and uncertainty, where as an investor will I park my money?
So this is a key question that many investors have raised while we are in discussion, and not to be surprised because of all these key concerns. A lot of investors simply put all their investment portfolio into cash. Not to forget, right? If you put into fixed deposits and short-term fixed deposits, you can garner as high as 5% per annum for US dollars fixed D. So a lot of investors actually started to shift a huge part of their investment portfolio into cash. This is what we observe, and a reminder a reminder that usually I put across the table is if you are investing, you should look at it from a long-term horizon. A lot of them are trying to time the market, saying that if the market crash in the coming months, I could actually deploy my cash effectively to capture opportunities. from empirical research as well as my experience, this seldom happens. There are people who was trying to time the market since the global financial crisis and remain uninvested for the last 10 years. No joke. I mean, this is a real situation. I think ultimately as an investor, if you don't, you're not in need of your cash in the short term, you should invest for the longer term. You should look at how your investment portfolio will fluctuate, because the 5% fixed deposit might not be guaranteed in the coming years. And you should look at positioning your investment portfolio in a diversified way to capture the opportunities that spring up across. Because given the uncertainties as well as the volatility, a lot of investors would prefer to stay on the sideline, and this is a psychological effect on the investors as well as the market.
Now, final question, Kian Soon, then where are you deploying your capital right now?
We are still deploying our capitals in Asia, because given that we are an Asian fund, we continue to look for a lot of undervalued companies which exist at the present moment, given that the markets, as you have seen, has experienced volatility and as well as corrections across the markets in Asia. So we continue to look for undervalued companies with strong cash flows, strong balance sheet, as well as companies that tends to perform well in an inflationary environment, companies that have no problem passing the rising cost to their customers. I think those are the companies that we sought after.
So price setters versus price takers then. Any names that you could share with us?
I would say that, if you look at the sectors, you could actually see there are some key themes across sectors. For the last few years, it was clearly healthcare. And as the pandemic, is over and people are getting, back to normalcy, I think this sector has been, the funds have been, moving out of healthcare. I think now people are more, setting their sights on the consumption sectors. As we said, right, even if, the Chinese are not, swimming across the straits or flying across as rapidly as we have seen, in this post-pandemic recovery, if you look at just the domestic travel and tourism within the country, right, you could find lots of opportunities. People need to eat. People need to spend money on necessities, fast-moving consumer goods. This will continue to be sectors of growth, because ultimately we are talking about a growing Asia population that is getting more and more wealthy over time. And they will have to find means, to make their quality of living much better. So we are seeing, premiumization. We are seeing, more interesting products on the markets, and that will continue to be a trend that drives the Asian consumers' pattern.
Kian Soon, it's always great to have you on the show. Thanks for your insights and thanks for coming on.
You're most welcome.
We've been speaking to Lee Kian Soon, CEO of Astral Asset Management, coming out from Singapore on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.